everyone, and welcome to another conversation of Unfiltered at the Water Cooler. My name is Melissa Evers. I'm the head of ecosystem at Kreneon, and I am thrilled to be joined today by one of our co-founders, Stan Hanks. He serves as our CTO, and we have an opportunity today to meet the founder and get to know him and his story a little bit better. So with that, Stan, why don't you start with giving us a background on who you are and your story? How did you come to be here?
Well, I started. I was born at a very early age. No, I started as a electrical engineering that took me into computer science because I wound up building CPUs for fun. And I was eventually asked, how do you program this thing, which took me into a doctoral program on distributed computing and high performance networking eventually. I discovered that I don't really have the constitution for an academic position. I'm bored silly, so I wound up leaving. I became a serial entrepreneur. This is my 20th company. I've been doing this for a very long time. Um, Along the way, I built a lot of the global internet architecture, wrote a lot of the software that made things happen, started some of the big fiber optic backbone companies in the 90s. And part of that took me through a period where I built a company at Enron, which was the world's largest commodity trading organization, as well as being a giant natural gas company, to build a commodity market for broadband, for internet bandwidth. And while I was doing that, I also wound up building another one for weather futures because I was building one, so they gave me another one to do as well. I left just when it became clear to me that I was, surrounded by people that were eventually going to go to jail, and everybody at my level or above did eventually go to prison. Um, the That's a whole different story. Uh,
That's a
I,
conversation for over drinks.
so that's we need alcohol for that one for sure. Um, uh, and, the But that I left that and wound up going into working for venture capitalists. So now I'm on the other side of the table writing checks, and that eventually took me into private equity, where I took $68 million and turned it into $1.5 billion line of business in over about 15 years. And in that, I dealt a lot with buying and selling intellectual properties. So from a startup perspective, I've sat in all the chairs. It's been me and three guys in a PowerPoint. I've raised money from venture. I've sold companies to private equity. I've sold companies to other companies. I've had IPOs. I've written checks as a limited partner into venture funds. I've been an allocator at venture funds. I've been a general partner of a venture fund. I've sat in all the chairs. So I bring a unique perspective to being a founder. I also have had this weird career arc. I've worked in strange and unusual things that seem completely unrelated and are related primarily through the vector of they were the most interesting thing that I found at the time. So medical imaging, cryptography, oil and gas exploration, satellite construction part two, where we're trying to build 30,000 cubic meter manned habitations, um, race cars. I mean, all sorts of crazy things. And I uh, this came to me from a venture I'd done a few years ago. I'd worked in atmospheric water intellectual property strategy. Pacific Northwest National Labs had developed some IP. They were trying to license it. I was brought in to help them figure out how to do the tech transfer and what terms they should be looking for, and then work with the company that acquired it to figure out how to protect that better and get it off the ground. And I got a phone call one Sunday night from an investor friend of mine who, let me turn this off, from an investor friend of mine who called up and said, "You absolutely have to talk to this guy." And And that guy was Michael Welling, who's the other co-founder. And so I am. It's like, okay, you never call me on Sunday night unless it's something big. So all right. So I had the call with Mike on Monday, and he's telling me about all these cool things he's working on. He's looking at water. He's looking at the environment, water in particular, though, and PFAS destruction and microplastics filtration and atmospheric water generation. And as he's showing me the deck, he's like, "Oh, I know those guys," and I tell him how I know those guys, and he's like, "Oh, okay." And then he starts talking about more things, and eventually he says, "Net new water." And in that moment, all of my neurons fired at once, and I said, "I can write a commodities future contract on that." And that completely derailed the conversation he had planned. We spent about 2.5 hours before we realized we'd both run way the hell over. Said, okay, can't do it tomorrow. Let's come back on Wednesday. We blew it another hour into 2 hours on Wednesday. We did the same thing on Friday. But for the next week, we just started scheduling 2 hours and still ran over. And after about 3 weeks, I said, we should just do this.
Mm.
And that's how I got here.
Yeah, that is how you got here. So in that wide array of experiences, both from the seats you've sat in, but also from the industries you've played in, what's your proudest accomplishment in all that amazing list?
So I think it's that I created the business model, the technology and business model that birthed the modern internet.
Mm.
And so I'd been involved in the actual debugging of the ARPANET and the writing of the software that opened the ARPANET up to non-DoD institutions. And then the helping the National Science Foundation Committee on commercialization. But in the 90s, we're starting into the commercialization path. The National Science Foundation is now operating a national backbone that is connecting the regional networks, which are all supposed to be financially self-sufficient as the government's moving out of the supporting the internet as a utility and making it try to be self-sufficient. And there were two major commercial players, UUNet, which is run by my good friend Rick Adams, and PSINet, which was run by Marty Schofstall, who's a less good friend, but still somebody I've been working with for a while. And I'm in Steve Wolf's office, and I'm at this point I'm at Metropolitan Fiber Systems, and I've developed a service offering for them that lets you run Ethernet connections across a metropolitan area. And it's literally, I just hand you an Ethernet cable on both ends, and you plug it in, and your networks are connected. And I don't see any of your routing, I don't see any of your bridging. I'm just like an extension cord. And we were using that a lot in finance and banking and all sorts of things. And I'm sitting in Steve Wolf's office. He's the director at the NSF responsible for this thing. And he's talking to me about how he can't get Rick and Marty and Phil Gross, who is a technical guy at ANS, which was the company that had the contract from the National Science Foundation for their backbone. He can't get them to all come to the same place and interconnect. And I said, well, why don't we just use my thing? Why don't we just all drop them in a 10 megabit Ethernet connection and they're just connected? And then the further piece on that was that we didn't charge for anything other than a connect fee. We didn't care how many bits you were sending to anybody. There's no send, receive, long distance kind of billing. All you have to do is connect. And that eventually became a piece of infrastructure known as MAE, Metropolitan Area Ethernet East, May East, named specifically to facilitate the later naming of a future development on the West Coast, May West, which, I mean, who wouldn't name that, right? But that literally became the principal interconnect point for the internet, the commercialization of the internet through the 90s. We at one point there were over 300 different internet services providers that would lease lines and pull a connection from where they were to May East to be able to plug in and share data with the other internet services provider. And the fact that we weren't charging anybody for anything other than the port charge made it possible to do all that.
Yeah, very, very cool. That's an amazing legacy. So switching gears and kind of bringing us back to Kreneon and bringing us back to our present. So when we say Kreneon is building the water or the market infrastructure to commodify water, what does that really mean from the perspectives of our global economy? And why do we call it a GDP accelerator?
Well, water is at the heart of everything we do as a species. I mean, human beings can last 3 days without water, and that's it, right? You can go a very long time without eating, but water is critical to survival. Our cellular organism construction is based on water. There's a famous line in one of the Star Trek Next Generation episodes where an alien life form encounters humans for the first time and describes us as ugly bags of mostly water. And and that's true. No water, no life. And so many industries, not only do human beings require water, but so many industries require water, utilize water as part of the manufacturing process. I
Mhm.
mean, obviously, if you're putting Mountain Dew in a bottle, you need water to make it not just be glop. But all kinds of manufacturing, stone cutting, making highly dependent on water, making silica dyes, the wafers, highly dependent on water. They actually cut the wafers out using water jets. The All kinds of things use water in unexpected ways. Water mills in the early dawn, the dawn of the Industrial Revolution, and we're at a point where, for most of the evolution of the human species, we've built our habitations in places where we just found water. It was just there. We walked up, it's like, oh, look, there's a lake, there's a stream. Right? And as we're not very good stewards of our environment. We polluted a lot of the water. We made it unusable, and we still continue to do that at a horrific rate. And yet, without this water, which we're so cavalier in the way we treat, everything stops. And now we're at a point where we're having to pay the piper on that. We're using, in large part, what some people call fossil water. It's from deep aquifers that were set, back in the Permian age, 400 million years ago. And you drill a hole in the ground, you suck it out like water through a straw, and you don't think anything about it. Particularly, I wonder how much is left.
Mm.
And we're now at a point where in some places we're finding out that there's not much. If you look at the Salton Sea area in California, that's dropped almost 26 feet in the last 80 years, where they're actually measuring the subsidence rate. I lost a house in Houston to subsidence that caused a foundation to crack corner to corner.
Mm.
Mexico City is sinking 3 or 4 feet a year in some places because we suck the water out from under it, the water that's supporting the soil infrastructure. Um, the high speed rail in the UK, same thing. They've had to slow it down to 40 kilometers in places. It's supposed to be 200-kilometer rail because the dips in the track make it not possible to run at full speed, or you get the evil Knievel jump at the end effect. Uh, not a
Never
good
good. Never
not
good.
a good thing. Didn't work out so well for evil. Be really bad for trains. So that's a big piece of it. And now we've got modern things that are taking disproportionate amounts of water. Our manufacturing call has been higher. Data centers and AI hyperscaler data centers, as opposed to just regular data centers, consume millions of gallons of water a day. And some of it they can put back, and some of it evaporates and re-enters the water cycle, but not locally. In the meantime, you've exhausted the local water supply to feed these things. Um, and there's a lot of sensitivity around that because people have recognized that water is vital to life, and now we've got these things taking our water as well as taking our jobs, right? So there's a lot of political sensitivity around this. By creating a commodity market, we make it possible for the financial institutions that I actually make it possible for modern society to work to understand the price of water as opposed to the value of water, um, and on that basis make a determination as to how to make more of that water less expensively. So one of the things that we've seen in petroleum, for example, since the commodification of oil in the 1970s is a direct response to the acute oil shortage crisis when OPEC put the embargo on shipping oil in 1973, is that the stabilized price adjusted for inflation is approximately the same, but there's 8x more in market because people sought the profit margin that was addressable by knowing that this could be sold as a commodity, and said, we'll make more of it because we can sell it at that price. And as that happened, as the availability went up, the usage rose to match it. Basically, we've seen that in a number of other industries. And if we're living in a world where we've got about a 60% water shortfall projected globally by 2030, and we've got a financial mechanism that in a decade or so has the capability of giving us a significant multiple over our current water production, by just making it possible for the markets to understand that this is actually something that you can invest in and get a return. This is going to change everything.
Yeah, I agree. And just on behalf of some of our partners in the ecosystem, I will also note that there's a lot of focus in the hyperscaler industry with regard to changing those market dynamics and figuring out how to have very high levels of circularity, very high levels of recycled water, or using other methods of cooling that are more environmentally sustainable, et cetera. So it's a big focus in the industry, but Stan's comments are absolutely spot on with regard to our history.
Well, having built hyperscale data centers, that's one of those things in my bucket. The trade-offs are really interesting because you can use air cooling, and you can use subterranean thermal dissipation, which is a whole thing most people don't talk about. But the problem with all of that is it takes more energy. So then you get the trade-off of, and when I say more energy, I don't mean like 5%, I mean like double. So if my energy efficiency goes to hell because I'm not using water, and my energy cost is effectively unbounded because most of it is still tied to hydrocarbons, or rare earth metals, right? If I could use solar, that's great, but then I have to store it for when the sun's not out. Hey, lithium, right? So now I've compounded my problem. So they're not using water because they're bad guys and they want to take the water. They're using it because that's the inflection point of the cost. And now we're trying to figure out how to solve that so that they actually get that cost exposed, which they're currently not. Currently, most of the large water contracts are sold at a discount to residential water because they're buying in volume, so they should get a discount, which is not reflective of the reality in energy, where the more you use, the more expensive it gets because you exhaust the stuff that's cheaper to produce, and now you're into the more expensive stuff.
Yeah, it's very complicated. I think that's both the solutions are complicated and the market economics are complicated. Yeah. So, Stan, when you were a chief architect of broadband trading at Enron, and you're a veteran with 9 exits under your belt, you've built markets from scratch before. How does the challenge of financializing water compare and contrast to what you've seen in your other experiences?
Well, it's actually very similar because with bandwidth, the initial impression is you can't do that, and we get that with water all the time.
We sure do.
when Mike and I were first pitching this to our first we pitched it to investors we knew specifically would not invest because we weren't going to burn any bridges by irritating them, and oh my God, the comments were constantly the same, and that's no one's going to ship water, right? And in bandwidth, it was a similar sort of thing. It's like you can't do that because commodities are physical things that get delivered someplace, and the transportation is a detail that gets figured out at close. And in bandwidth, the transportation is the interesting part, right? I can pour. No one cares that I drop a giant USB drive full of bits in St. Louis for somebody to pick up. They care about the fact that I can move those bits in real time at 10 gigabits per second. So once again, it's this paradigm shifting kind of thing. And in the case of water, we thought initially it's like, oh yeah, there's got to be market mechanisms that solve that. And I looked at what they'd done in aluminum, and I looked at what they'd done in electricity, and then the reality winds up being people ship water all the damn time. We spend $450 billion a year moving this stuff around, and we only spend $300 billion a year on actual water infrastructure.
Right.
Right. That seems highly disproportionate. There are people that are collecting fresh water and putting it in barges and shipping it across the Atlantic from places that have water to places that don't, and they're making money at it. Right. When we look at natural gas, which was a waste product in the 1980s, we're literally lighting it on fire, so we didn't have to so it didn't kill us basically, because it's a methane layer, it's heavier than air, and if you didn't burn it, everyone would suffocate. Right. Now once natural gas commodified, they collect that and they liquefy it and they put it in super tankers. They ship it all over the world.
Yep.
And that's something else that no one was ever going to ship, and it's just an annoyance, and oh my God, and well, look what markets do when you give them the opportunity. They chase alpha. They're looking for profit. So this is very similar. The naysayers, the people that are saying, oh, you can't do that this will never work. We've had to do some work to get some actual answers for these guys. And it's going to continue until it doesn't, until this is just accepted as the way things get done. And there's a tipping point in the market. Every market starts with the first trade, right? And at Enron, I built at Enron, I had three things going for. I had two things going for me that we don't have here. The first one of those is that we were the largest buyer and seller of commodities in the world, and I had a giant balance sheet that let me spend billions of dollars building a naturally long position, the ability to produce bandwidth, and a naturally short position, things that took crazy amounts of bandwidth that nobody would ever have done in a million years if they'd had to buy it the way it was traditionally bought. That gave me the ability to come up with a contract and say, no, really, I will buy from you if you sell it to me on these terms, and I will sell to you on these terms to get to the point that we could get that meeting. And then, because we're the biggest trader, I actually went to a trading partner in another commodity and said, look, I'll make this seriously out of the money trade with you if you'll do the first trade. And then once people saw that happen, it's like, oh, wait, hold on, I can do this. Yeah. And then we slowly started stepping it up. It's going to be the same thing here.
Yeah, for sure.
Minus the fact that I don't have a $20 billion treasury to back me at this point.
Yeah, we just need a few investors and we'll be there.
Right. Well, it's literally true that it's inevitable. We talk to global commodity traders and they say the same thing constantly. Everyone we've talked to says this: if you have to trade physical water and it has to physically settle, and you have to do it the way that every other commodity does it. And if you do there, I'm there with $1 billion to trade this.
Yeah, it's exciting. All right, so let's talk security. Your background's deeply rooted in PKI, telemetry, complex hardware, software, control stacks. Why is anchoring market data, the financialization of these assets, to device truth, the only way that you can build an asset class that the global commodity traders who you talk to all the time can actually trust?
Well, okay, if I'm trading gold, there's a standard for gold. For any commodity that's traded on any commercial exchange, there's a document that describes the standard trade, and that includes a specificity about what the hell it is we're trading. Live hogs, pork bellies, gold, natural gas, WTI. There's a spec sheet that describes what it is. And for all of those things, physical commodities, an actual gizmo that I show up with, right? Then there's a way to test that, right? And if I get a truckload of this stuff that shows up in my front yard, because that's where I said I wanted it delivered, and they dump it out, I've got a way to look at each piece of that and tell that if it is or it isn't in compliance, right? Carbon markets, which were a great idea and are still it's still $1 trillion operation, suffered from this problem because you can't really measure it. You can kind of estimate, and particularly carbon offset credits. markets, because if I've got this thing that's I'm going to use a bunch of electricity, and if I go to my local utility and I say, please sell me some electricity, and make it provided by coal, then I can do some math and I can figure out, well, I have to burn so many BTUs of coal to generate this many kilowatts of power. I have to take this many BTUs of energy, and I have to I get that by burning this much coal because I've got this kind of efficiency transfer in the combustion process, and all the thermodynamics and mechanical engineering piece. And I can say for a kilowatt hour of electricity, I burn this much coal. And then I go, well, I'm not going to do that. I'm going to do this other more carbon efficient thing that's going to burn. And then once again, a bunch of guys with calculators and pencils are going around and they're saying, and it's going to burn this much. And so you get a credit for having not burned coal, because the delta between the thing that you did do and the thing that the worst possible thing you could have done is this. And it's all just guessing.
Yeah.
And it's also possible to fake a lot of the data.
Yeah.
And because of that, no one really trusts the carbon markets. It's all I could say I'm actually burning liquefied natural gas and really be burning, diesel, and you don't really see that. And I shouldn't have got the credit that I got. If I'm not using solar, and if I say I'm using solar and I have 0 solar panels, odds are pretty good you can tell I'm lying. But on some of this other stuff, you just don't have any idea. So this verification, the ability to verify that the commodity is as represented, is a critical piece to trust in the market. And so for us, we're not initially talking about groundwater. We're not talking about lakes and rivers and streams and wells. We'll get there. But right now, we're talking about what we call manufactured water. There's a magic box with a handle on the side. You turn the handle, water comes out. So we're looking at things like desalinization, severe pollutant remediation, PFAS destruction, atmospheric water generation, hydrogen oxygen recombination, which is actually a viable strategy if you're making laboratory grade water. But you're making water that, had you not taken an action, would not exist. And your feedstock for that is something that is identifiable as not water, as opposed to the water treatment system in your local town, where I've got a water plant that takes water out of the lake or the river or the Bull Run or runoff, in the case of Portland, and then filters it and purifies it and adds fluoride and adds chlorine and scrubs it and takes out the turbidity. And they're taking found water. It's still water in, water out. It's just a better grade of water coming out. We can't touch that right now. And there's some complex reasons, the not the least of which is chain of ownership. And in most regimes, that's a political problem that we don't want to touch before we get into the market. The market will fix the political problem. I can't use a political outcome to fix the market. Anyway, so because we're focused on manufactured water, we know at exactly what point in time and where physically this water was created. So the ability to say this device, serial number XYZ114, sitting in this location at this time of day between this time T and this time T+1, produced this much water. And then more also to the point, we know what grade the water is supposed to be according to the people that manufactured it. Yep. They have a contract where they have sometimes a regulatory obligation to deliver water that meets certain specifications. And we record both of those, well, all three of those, the where it was made and who made it and how much was made and what's the quality that they're saying it is. And we record that into our source of truth for creating the financial instruments. And unlike, we don't have to prove that they're right. We don't have to prove that, yeah, they did give me 10,000 gallons, and yeah, it is EPA number 143 grade water. They've made that claim. The market fixes this for us, because in a commodity market, if you sell a contract, I'm delivering this to you. I'm delivering it under the terms of the agreement. If I don't deliver the quantity that I'm supposed to deliver, or if I don't deliver the quality that I'm supposed to deliver, I, as the seller, am responsible for making you, the buyer, whole for getting the thing you really needed.
Yeah.
And that typically means I have to figure out how to help you source it, and then I have to pay triple liquidated damages on the cost associated with all that. And if I just made an honest mistake, that's the extent of it. If they think I did that intentionally, I may get barred from the markets. And if they think I did it egregiously enough, I may wind up with federal fraud charges. So you don't. We have a higher level of trust that what they say is true. Plus, we've got the ability to once a year or once every 3 months or whatever the interval is, send a guy around with a clipboard and a test tube and verify that this stuff is. And and just like the gas pump at the filling station has got the little placard on it that says inspected on this date at this time, and this pump is pumping what it says is pumping, the same thing will be true for this too.
Yeah. Wonderful. So briefly, as we wrap up, I've got 2 more questions for you. So what are you most excited about with Kreneon?
Two things. One is I genuinely believe that this is going to change the world. I think this is gonna have a huge outsized impact. 20 years from now, we'll wonder why we hadn't been doing this for 100 years. And the second thing is we're in a bad shape as a species on this planet, having contaminated a significant fraction of the water that we have available to us, and having far more people than the planet was really designed to support, and doing stupid things in the way we operate agriculture. We're in trouble, and this is going to fix some of that, and I'm pretty excited about that.
Yeah, me too. Me too. So, in closing, what's one fun fact about you? I know there are many. So, what's one fun fact that you'd like to share with our community?
In addition to degrees in electrical engineering, computer science, and applied math, I've got a minor in fine arts.
Oh, that's cool. Where did you focus your studies?
Film,
Okay.
film of the history of film.
Very cool. Very cool. That is, you're right. That surprises me. I didn't know that. So that's cool. Very good. All right. Well, thank you so much, Stan Hanks, CTO of Kreneon, for joining us for this Meet the Founder conversation. It was delightful as always. And thank you all. We'll see you all again soon in our next episode of Unfiltered at the Water Cooler. Thank you so much. Bye.
Thank you so much for having me.